Welcome back to the channel. My name is Brad, and today we're going to talk about EIC from Eagle Point. It's a closed-end fund that invests in CLOs. So one thing I like about EIC is they focus on this particular fund on BB debt tranche. That's important because what you may or may not know is there's multiple trenches. You got the AA, all the way down to non-rated equity trench. And it's a waterfall. So the money comes in, the top layers get paid first. So these aren't the bottom players that may or may not get paid, but the bottom payers get paid any extra. And you got to keep in mind, these are leveraged. So when they do this leverage, there could be some extra. Makes their yields a whole lot higher once you get into the equity trench. But we'll talk about that. So what makes Eagle Point different than everybody else? Because there's a bunch of them out there, and there's more coming out every single day. There was an announcement today that there was another one. So these guys are coming out, so keep that in mind. One thing is they were awarded the 2023 Best Closed-End CLO Fund. So that's interesting. I better double check that one just to make sure that they're not just putting something out there. Oh, I did. 2021, 2022, 2023. Yes, Eagle Point just happens to be at the top of the range. Very nice. Always nice to know that somebody else is checking this because you never know. They could put, we're the best fund ever from EIC company. So you better check them. The other part of this is they got a team that's been around for years. Not new to this whole game of CLOs. Like I said, I went and double checked just to make sure I knew who was who. And you can see, and for this is going to be the junior debt investor, the one all the way to the far right. They're also the best equity investor. 2 for 2. And we'll look at these as we go through. So in this particular fund, they are 77% in BB rated CLO debt. There's also a small portion in B rated, which is one step below. And then they have 20% in CLO equity. That's the bottom layer. That's where they get a little more premium. But that's also where any losses gets taken out of first. Keep that in mind. Date to maturity. This is somewhat important because you don't want a lot of things maturing very quickly all the time, because then they would have to go buy more, and there's a life cycle to CLOs. So it's nice to see that the maturity is out a little ways, and they manage this. Actually, they publish this on a monthly basis on their website, so you can actually track this over time in their monthly reports. Distributions per share. Anybody that likes up and to the right, all you got to do is look at the distributions per share. It just continues to go up and to the right. Now, they did have some special distributions back in 2021 and 2020. And when I did my backtesting, I took those into consideration. So, BB versus BB high yield bonds. Clearly, you can see that there's a difference in what they actually pay. Same companies getting money, and you just sit back and go, one's paying 12 and one's paying 6. I'll stick with the 12. Thank you very much. Also, you'll notice it's also got about a 1% default rate. So that's not that bad, because when you calculate it back in, that's only about 4 pips. So not very much. The question's always going to come up. Do they drip at NAV? Very good point. Actually, on their annual report, spells it out like right on page 4. They drip 5% below the current price until it hits the NAV. So if it's the prevailing price is more than 5% above NAV, you're going to get a 5% discount every time it drips. Very nice. Question. Well, where is it now, Brad? Don't tell us it drips 5% below and you don't show us where it's at. Another great point. So over the last 52 weeks, it's averaged 5.96 above NAV. Very good. Currently, it's 11.22 above NAV. But you can also go find this out for yourself on a daily basis or look at a chart. I'll leave that link below. So one thing you might want to know is, hey, Brad, I don't know enough about CLOs to get involved. I am going to leave a link below from Seeking Alpha, from Steven. It's part of his chapter 13, and he walks you through CLO investing. This link is totally free, so you do not need to be a member to actually read it, and it doesn't count against those 5 free articles they give you if you just show up and register. But this is a free link, so please enjoy reading all about CLOs from Steven down below. Now, I did my back testing, and I was a little worried. I was very worried. But then I was like, man, this is awesome. I can take my 8%, and I can do that very easily. And you can see in the charts when they have to finance and refinance, and when the rates go up and the rates go down, you can see how that kind of affects their profitability. But my 8% over time looks extremely well. Matter of fact, if I reinvested everything back into it, it doubled my money in 4 years. I'm not going to reinvest everything back into it. I'm going to take my 8%. So the kicker is you get that extra 5%. So it's 14%, 14 and a half, plus an extra 5 if you drip at the discount. And that gets you closer to that 19%. That's an extremely good way of looking at it. Now, you can sit here and go, hey, it has NAV erosion, it has this, it has that. And it doesn't really have NAV erosion if you look at it long term. But if you took it at a certain point, you can say, oh, the NAV went down. But you can say that about any fund. Really, you can. You can go find a point, and I can go search a point for almost any fund and say it goes up and down. Remember, they have to refinance when the Fed changes and they change that overnight rate. They may or may not be able to clear up the financing. Right now, it is a big deal in the CLO market. They're actually cleaning up refinancing as the Fed starts to lower rates. So they're going to be able to keep their profitabilities. And that's an important part of being with an established CLO manager or a closed-end fund, is knowing that they're going to be able to adjust to the adjusting rates in the marketplace. So hopefully this answers some questions about EIC, and you should go out and do some due diligence yourself, because nothing here is financial advice. This is just Brad talking, looking at the charts going, this is something I'm investing in. I have a small portion, and I want to play it out. It's done well. I've had this for a few months now, and it does drip at that 5% discount on Fidelity. Anyway, until next time, God bless.